You're likely watching this video because you've heard on the news that it's becoming more affordable to buy a house. Well, interest rates and home prices are dropping and many people are out buying properties. But let's take a step back and see if this is actually true. I'll use some public sources and real data to help you figure this out. What's up, guys? My name is KMAC and I'm a licensed real estate agent in the Dallas-Fort Worth area. But before we get into today's video, if you guys are finding the content on this channel useful, please give us a like, subscribe, and turn on all notifications to always be notified when I release another video. Now, first, we must understand that two main factors determine housing affordability. First, that's going to be housing prices and mortgage rates. You need to focus on these when thinking about buying a home. Many people actually look at the national housing markets, but it's better to more focus on the home prices in your specific area, or even better, the neighborhood or zip code that you're specifically looking at. Now, you don't need to be an expert to track mortgage rates. A simple site like mortgagenewsdaily.com, which is oftentimes the website that I use on a daily basis just to check rates, can help. If you check mortgage rates, you'll see that FHA loans often used by first-time home buyers are dropping. For example, if we compare 5 3/4 interest rate to a 7% interest rate on a $410,000 home in Dallas, the monthly payment drops significantly from about $3,220 to a little shy of $2,900. Over time, the difference in interest paid is huge. Rather than paying $935,000 at 7%, you're paying $588 at 5 3/4%. Now, over the course of the last few weeks, we've kind of seen what we thought was going to be a deep recession. The stock market tanked for a couple days. It's now been recovering. We also saw when typically the stock market tanks, mortgage rates then also tank, meaning they go down, which is desirable for folks that are looking to purchase a house, but not overly desirable if you were hoping to use maybe some part of your stock account to be able to use a down payment to purchase a house. It winds up being kind of a double-edged sword. Now, with the election coming up in the next couple months and just a lot of data kind of being thrown around in the news, one of those being the expected rate cut coming in September. Oftentimes when we talk rate cuts, they're often already baked into the current interest rates. You can kind of see over the last couple weeks, because of the likely September rate cut, rates have continued to fall, including with the fact that the stock market started to tank. It's recovered since, but we all saw that when the stock market started to tank, rates again started to tank as well. Now, I can actually give you an example on a property that I have that's almost 8%. Now, it's a short-term rental and it has been cash flowing tremendously, but you can get an idea of just how excited I am going to be when I'm able to refinance that, not at a $410,000 loan balance, but close to $1 million loan balance, because a good portion of my overall mortgage, we're talking an $8,300 a month mortgage, $6,300 of that is in sheer interest. Now, yes, it's cash flowing well, and I'm fine paying $8,300 a month, even though $6,300 is in interest alone, but I would love to be paying maybe $6,000 or $5,000 a month with a considerable amount less in interest. I think we can all agree if you're sitting with an interest rate in the 7s, 8s, or maybe even high 6s, you're probably antsy or anxious about getting a much lower interest rate. My advice for folks that are kind of in that region is definitely be paying attention to mortgage rates, stay in tune with your mortgage lender, mortgage broker, or be staying in tune with your realtor that you used. If you need a realtor, I can definitely advise you on one, because you could probably in the next year to year and a half, or maybe just in the next month or two, be in a good position to refinance and save yourself a good bit of money. But I guess the downside with mortgage rates falling is oftentimes that correlates with home prices then rising. But now let's talk about home prices specifically. Now, to get accurate data, you need to have access to the MLS, which is the multiple listing service usually accessible with a licensed real estate agent. So this is the backside of the MLS here in the North Texas region. This is going to very much encompass not just the Dallas-Fort Worth area, but a lot of the rural areas outside of the Dallas-Fort Worth area. Everything I'm going to be looking at here, guys, for you is encompassing our entire MLS. Now, I could add an area if I was specifically looking at a city, which it would vary pretty drastically because you have your rural areas that are really affecting more of the populated areas, but I'm just giving you a general consensus of kind of what we're looking at here first. So this is the last 10 years across our entire MLS, and you can kind of see the first tab I'm showing you guys is the median, which I'll tab over to average. You can see the average sales price in our market. It has continued to rise, but also fall at different periods of time, which I'll showcase here in a second. It has continued to rise really over the course of the last 10 years. Now you can see here, really peak market for us was May and June of 2022. That's really when rates were the cheapest. That's when the housing market absolutely exploded and everyone was purchasing a house for either a 2 or maybe 3% interest rate. Then you can kind of see what happened when rates started to fall. Now, typically the second half of every single year, prices fall anyways. It's just the second half of the year here is always slower. Now, at the beginning of January of 2023, you can see that home prices continued to rise again until halfway through the year. June 2023, again, rates still were kind of interchangeable, going up, going down. They were absolutely nowhere near where they were a year ago, but still people need to buy, people need to relocate. The summer time frame is when they tend to do that the most. And again, you look towards the end of the year, home prices went back down and they've gone back up this summer. Well, outside of the little blip that we have here for July, home prices peaked in May of this year, and I believe we'll likely know here at the end of August or 1st of September. This is likely to go back down and continue to go down till the end of the year. However, the biggest thing here, even if you're looking at the beginning of 2022, home prices now are not anywhere near where they were at the beginning of 2022. And even when they fall, which is likely what they will do towards the end of 2024, they're not going to come anywhere close to where home prices were at the beginning of 2022. Now, one of the biggest things I tell people is definitely don't time the market. I'll talk about this a little bit later. But as you can see here, you can pick times where, hey, maybe if I bought a house there, I would be in a good position, you know, a couple months later or a year later. Well, hey, if I bought a home price here, you know, June of 2019, I would probably be stuck at the same value all the way till June of 2020. For a whole year, my house hasn't gone up in value. Well, you'd be in a very good position now if you bought in June of 2019. And really, there's not a place in here over the course of the last 10 years that you can look at and say, hey, I shouldn't have bought a house here because I wound up losing money in the future. Now, let's even use the peak of the market in June of 2022. The average sales price was at $490. Even the peak of the market again in May of 2024, we're slightly above that $5,000. So maybe over the course of 2 years, you haven't really gained any value in your home. But as rates are starting to head down, you can likely expect these home prices to continue to rise. Now, another tab I like to use here is the month's supply, and I'll explain exactly what this is for you guys. Now, a month's supply is essentially going to tell you, are we in a buyer's market or are we in a seller's market? Now, if we look really from the beginning of 2014, maybe until 2017 timeframe, but these humps are going to be generally seen on an annual basis because, again, the beginning first 6 months of the year tend to be the most optimal time in our market locally here in the Dallas-Fort Worth area, and the second 6 months are really when we have less inventory. So this essentially means that, hey, from January of 2014, really until, 2 years later, 3 years later in 2017, we didn't have a ton of inventory. So I'm going to use 1.8 March of 2014 as an example. That essentially means if not a single home was listed in our entire MLS for 1.8 months or close to 2 months, we'd have no more homes left to sell. Well, at the start of 2017 is when we started to climb a little bit. We went from more of a seller's market to more of a neutral or regular buyer's market. Somewhere in that middle 3, low 3 range. It's gonna be your normal real estate market, okay? You can see at the time of the years, it falls during kind of the second half of the year and then starts to increase towards more of the middle of the year. But something started to happen towards 2019. We actually started going towards more of a buyer's market. So really towards the end of 2018, going into 2019, you probably could get a pretty good deal on a house, meaning there was just a ton of inventory, you had a lot of different homes to choose from, and you could essentially find one maybe that was sitting a little bit longer on the market and negotiate a little bit better. Well, the issue is if you didn't buy in 2019, that was kind of the peak buyer's market. Well, I should say until now. The thing is, once 2020 hit, the month's supply absolutely plunged. We kind of hit almost 4 in April of 2020. Then we all know what happened and rates plunged. We had a bunch of Fed rate cuts, mortgage rates absolutely tanked. They went down to incredible rates, and I got a couple investment properties as well as primary homes in the high ones and low twos. Now this stayed the same for a little while until inflation absolutely ate us up, and we had to do something with it, which is when the Fed started to raise rates. And you can kind of see what happened after that. Well, we went from about a month of supply all the way to about 3 months at the end of 2022. The hot time of the market kind of came at the beginning of the year, and we had a little less inventory the beginning half of 2023. But looking at the rest of 2023, even at the end of 2023 when it tails off, and the start and rest of 2024, we are now essentially in the best buyer's market that the Dallas-Fort Worth area has seen in the last 10 years. But, and that's a big but, rates are starting to fall. We are at 4.6 months of inventory effectively at the end of July 2024. But if we get that rate cut in September and maybe we get another rate cut by the end of the year, this 4.6 is no longer going to stand. It may raise to 4.8, may raise to 5.0 heading forward in August and September. But if rates continue to be cut and they continue to fall, you're going to see this good buyer's market that we are seeing probably across the country, as the Dallas-Fort Worth area is still a very desirable area, but we are seeing a much more ideal market for buyers really fall off towards the end of the year and leading forward into 2025. Those home prices that I showed you just a second ago, as far as average home prices, are going to go up. The month supply is going to go down, and that's all due to the affordability of houses due to mortgage rates. However, buyers are negotiating more closing costs and concessions, which might make it seem like prices are actually dropping. For example, a seller might offer $20,000 in concessions, reducing the effective cost of the home. So are homes getting more affordable, or are they not? Well, I can honestly only give you opinions and I guess facts based on my local market here in the Dallas-Fort Worth area. So obviously this could be great input if you're, local here in the Dallas-Fort Worth area. And if you are and haven't reached out to me and you're in the position to potentially purchase a home, I would love to be able to help you, regardless if it's just selling a home, investing, or just purchasing a regular home to begin with. Now, if you do need a local expert, I'm in one of the best coaching organizations for all of real estate across the country. I'm very well connected and can get you connected with one of the top real estate agents in your local market who will have a great mortgage broker to connect you with as well. So just gonna give that precursor here. All of the information I'm about to state is with my local market here in the Dallas-Fort Worth area. Now, in my personal opinion, I've been selling real estate here for 7 years. Every single year, the second half of the year is always slower. Now, I can tell you Q4 of 2023, that means the end of last year, was by far the slowest time in my entire real estate career. Now, I would say probably 2024 is going to be even slower, but rates are coming down. So with rates coming down, you're really going to open up a lot more potential houses, or I guess affordability, for folks here locally in the Dallas-Fort Worth area. As I mentioned earlier, just a 1 or maybe 2% lower interest rate on a home could be a substantial amount of interest saved just for an average buyer. Now, in regards to the DFW area specifically, there are a lot of areas that are still very, very much in high demand. We're talking specifically, the North Dallas area that just doesn't have a ton of inventory. Now, when inventory does come up, if it is a very desirable house and in a great location, it is still going to sell and sell quick. I also just sold a couple homes that were more in the central area of our metroplex, kind of around the Dallas-Fort Worth airport. Those as well, just due to location and affordability, flew off the market. But then I also have a couple homes that are surrounded by a bunch of new construction. I also have a couple homes that are in a less desirable area, and they've been sitting for a little bit longer as well. This is definitely not the market that we had from 2020 to 2022, but it's also not an incredibly slow market, and will not be an incredibly slow market if rates continue to fall. Now, my suggestion, if you are local to the Dallas-Fort Worth area, obviously I'm a little biased, reach out to me and I'll do everything I can to help you. But if you already are working with an agent, my suggestion for you is to make sure you're doing your due diligence when it comes to purchasing a property here. If it is in a less desirable area, know that you are likely going to be able to negotiate a little bit more than you have been in the last couple years. But also know that if you decide to put it on the back burner and maybe buy in 6 months, let's say the beginning of 2025, and we wind up having multiple rate cuts and it's the beginning of the year, you may wind up actually hurting yourself because you're going to have less ability to negotiate as rates come down further. Now, what I certainly advise that you don't do is try to time the market. Don't try to time the stock market, and don't try to time the housing market. If you're in a position to purchase now and you've got the flexibility, don't rush into the very first house that you see, but also don't take the next 12 months waiting around until there are so many buyers come maybe summer of 2025, where now you're having to offer well above asking just to be able to purchase a house and waiving all of your contingencies like we certainly saw a year or two ago. Again, if you're in a position to purchase a house, have it make sense, do your due diligence, regardless if you're in the Dallas-Fort Worth area. Make sure that you're connected with the right type of people who are not going to shove you into a house for a quick paycheck, but make sure that they are getting you a house that's going to be a great investment and a great property that's going to make sense for you given your life circumstances. Now, if you do have any questions about the housing market as a whole, leave them down in the comment section below or reach out to me via Instagram or my email that is in the description below. I love talking about real estate and helping anyone in any way I can. Thanks again for watching, guys. Make sure to like and subscribe. It really does help. And stay tuned for the next video.